This is Christopher Lewis from the dailyforex.com trading desk, taking a look at the upcoming April 4th Forex session. Pair in front of you is the euro dollar. As you can see, I have a fairly clean chart here. I have the 130 and 135 levels laid out, although it should be noted that recently I have been paying attention to, and for lack of a better term, I've been calling it 132.50. You can see that there's several layers of resistance, and once we broke above it, we actually found support there. And truthfully, it's really about 132.50 to say 133. Now, as I draw this as two lines, just think of it as one thick band there. You can see that we broke out and we found support several days in a row. During the session on Tuesday, the Federal Reserve released minutes that gave no hint whatsoever of quantitative easing. It seems that a fair share of the market was expecting this, and as such, the dollar gained rapidly in the afternoon in U.S. trading, shortly after 2 p.m. Eastern Standard Time or New York time. The bar is closing at the end of the session almost at the absolute lows, and we have broken through the bottoms of three hammers, which, while there is a hammer or two below, that is no slight feat. And as such, it does look like we could see some real weakness in this pair. Adding to the tension in this pair is the fact that the ECB does have a press conference at 8:30 New York time later today, in which they could give a downbeat assessment on the economy. In fact, there are many participants now looking for a downward revised GDP estimates from the ECB. So if we get that, that could continue the pressure. A breakdown below the bottom of the session, and I would use 132, clarity of that, as the trigger point. I personally feel that this pair should go down to the 130 level, and I personally will be short of it. The 130 level will bring in a large fight. If 130 can be overtaken to the downside, then we could get some real traction in this pair south. As there are so many headline risks in Europe at the moment, I have no interest in buying the euro until it can prove to me, by closing well above the 135 level, that it is a solid and viable currency at this point in time. There's far too many issues. Spanish bond yields are starting to blow out a little bit in comparison to Germans, and of course the Spanish debt was announced during the session on Tuesday to be at its highest level in the last 20 years. Because of that, there are just far too many landmines in Europe, and with the Americans bringing out better than expected economic numbers, it's pretty obvious which direction that this pair, at least fundamentally, should be going. On top of that, the fact that the Federal Reserve made no mention of quantitative easing, and the ECB may be in a situation where it has to cut again, we could see a convergence, I should say, of interest rates in this pair, and in an environment where there are debt issues, money will flow out of that region and into the safest currency possible, which of course is the US dollar.